Welcome to CA Sri Lanka webinar series for BL6 Management Accounting Mock Exam 2. All the students who don't know about me, I am Hashan Maduge, a chartered accountant and also lecturer for management accounting for more than 7 years. So what is our discussion is the mock examination 2. You had a mock exam. So now we have to discuss how to get the answers and how to get ready for the examination within few weeks. So as you already know, the examination dates have been already published. So you have a few days to study and face to the examination. So as you know, the BL6 paper will have how many questions? You have 50 questions. Before going for the mock exam, I am just giving you some tips to get ready for the examination and pass the examination. So 50 questions, so all are MCQs. These 50 questions you have to answer within how many hours? Within 2 hours. Within 2 hours. So 2 hours means 120 minutes. 120 minutes. So in that case, per one MCQ, per one question, you have how many minutes? You have 2.4 minutes. 2.4 minutes. So within 2.4 minutes, you have to answer. That is the target. That is the challenge. I know that if the paper is 4 hours, definitely all the students who are writing this exam will get through. But the thing is, the challenge is, you have to score more than 50% of marks within 2 hours. So in that case, you have to have 25 questions to be corrected. Only 25 should be correct from the 50 questions. So that is the target. So I'm telling you at the examination, just say we have 2 minutes. 2 minutes per one MCQ. 2 minutes per one question. So how you can manage at the examination? You cannot just see the time by doing one question. Okay, this is 2 minutes. So again 2 minutes. Now the time is 9 to 1 question is done. 9 for 2 questions are done. So you cannot do like that. But you can have a plan like this. First 10 questions. Then the second 10 questions, third 10 questions, fourth 10 questions, fifth 10 questions. So which means here you will be doing first to 10, here you will be doing 11 to 20, here you will be doing 21 to 30, 31 to 40, 41 to 50. So you can have a time frame for all these MCQs. Let's say you allocate only 20 minutes for this. Only 20 minutes for this. Again 20 minutes for this. Again 20 minutes for this. Again 20 minutes for this. So likewise, let's say you start the exam at 9, just example. So at 9:20 you have to finish first 10 questions. At 9:40 you have to finish the second 10 questions. At 10 you have to finish the third 10 questions. So which means you have to do 30 questions at 1 hour, after 1 hour. So then 10:20 you will be doing another 10 questions. Then 10:40 you will be done another 20 questions. Right? So then you will be having another 20 minutes. What you will do? All these questions are not similar. There are difficult questions also. So what you have to do is, you have to go through the difficult questions again and see whether your answer is correct. You may have doubtful questions. Then you will go through again and see whether you can get the 100% correct answer. So sometimes the first 10 questions might be easy. Then you can save some 5 minutes from that. Maybe you can get that 5 minutes to next 10 questions. Likewise, you should have a good plan. If you don't have a plan, maybe you will end up with doing 45 questions. Maybe you will get 46 marks, 48 marks. So in that case, because of one question, just because of one question, you might fail the exam. So what I am telling you, plan the examination well, plan at the time, okay, this 2 hours, how I am going to take the questions. That is more important, right? So we'll go for the paper. And also don't depend your exam results based on the mock paper. You might get some lower marks for the mock exam, but you have enough time to get ready for the actual exam. So in that case, you will have enough time. So don't worry. And for this, I will divide the board like this. This is for the calculator. Why I am putting calculator? This is a MCQ exam. Do you need to provide working papers to the examiner? No. So what you have to do is get the answer anyway. Sometimes you don't need the theory. Sometimes using just the calculator you can get the answers. So in that case, some of the questions I will be using this phase to explain you how to get the answer quickly through the calculator. So the first question, the following graphs are given. First question, following graphs are given. First one, total fixed cost and the output, unit variable cost and the output, then the unit fixed cost and output, total variable cost and output. Then which of the above graphs are correct in the context of cost behavior in the short run? So before going for the question, I will just refresh your knowledge on this. You know fixed cost. How it will behave? This is total fixed cost. With the units. So when the unit increase, fixed cost will change or not? Will not change. That is total fixed cost. Let's say you are having a rented house, rented building. Doesn't matter how many units you are producing, fixed cost will not change. Then the next one is total variable cost. This is total variable cost. What will happen for the variable cost? When the number of units increase, your total variable cost will increase. See, when the unit increase, this increase. Again, when the unit increase, this increase. That is total variable cost. But you have to know then, how about unit fixed cost and the unit variable cost? So how the unit fixed cost will happen? Now the total fixed cost will not change. In that case, when the number of units increase, the fixed cost per unit will decrease. So it will go like this. See, it will decrease like this, but not touch this line because unit fixed cost will not be 0. So this is fixed cost per unit. So when the units increase, it will be like this. Then what about the unit variable cost? Let's say 1 unit variable cost is 10. Total variable cost will change. But will the per unit variable cost will change? In any day, even the first unit variable cost is 10, 100 unit variable cost is 10, maybe 100,000 unit variable cost is also 10. So at that case, per unit variable cost will not change. So per unit variable cost will be like that. Variable cost per unit. So what they are asking, first one is what? Total fixed cost output. Correct? No? That is like this. Second one, output is their unit variable cost. This one. That is also correct, no? So this one there, these two correct. Then the third one, unit fixed cost will go down like this. So that is also correct. What is the fourth one? Total variable cost and the output. Now see, total variable cost start with this. Why? Because at the 0 units, total variable cost also 0. But what they have given actually? They have given like this. What is this? This is not the total variable cost. This is the total cost. This is the fixed cost and variable cost start like this. So this is the incorrect answer. So in that case, number B, 1, 2 and 3 only correct. 1, 2 and 3 only correct, right? So this is the first question. I think you have already refreshed your knowledge. That's the objective of this webinar series. So the number 2, question number 2. Question number 2. Which of the source documents could be used in obtaining the following information with regard to a procurement process? Unit prices of the items bought for the purpose of processing the payment to a supplier. What is this? You will ask from the supplier, okay, what is the price for each unit? You are just getting information from the supplier. What is that document is called? That is a purchase order. Then quantity of items received at the receiving. What we are receiving? Quantities. Those are the goods. Then for the purpose of updating inventory records, that is what? Goods received note. Good receiving note, right? So then quantities of items returned to the supplier. You will get the item, then you will send back to the customer. So that is called what? That is goods return note. So normally how the process will be happen? Purchase order will happen. Then sometimes maybe it will be supplier invoice. Then maybe GRN. Maybe then GIN. What is GIN? Good issued note. Maybe again good return note. Return means the goods that you cannot use, you will be returning to the supplier again. So in this case, what is the correct answer? For the question 2 is C. Question 2 is correct answer is C. Purchase order, goods received note, goods return note. Then the next one. Next one. Given below is a graph of the total cost of product A. Which of the following is the variable cost per unit when 50 units of product A are manufactured? So when the 50 units are manufactured, variable cost per unit will be asking. They have given you a graph. Total cost is there, output is there. What method do you have to use for this? High and low method. Question 3. High and low method you have to use. High and low method. So what you have to do is, you will decide some two numbers. Let's say units. Units, total cost. We will select some 2 units. First, let's say at 10 units. 10 units. Then maybe at 50 units. 50 units. Then the total cost. What is the total cost at 10? That is 20 million. Go like this and see. 20 million. Then at 50 units, how much? 50 units. That is 60 million. That is 60 million. Now what you can do? You have to look at the change. The change in total cost and the change in units. Change in total cost is how much? This is 40 million. This is 40 million and this is 40 units. So in high and low method, what you have to do? You get the difference. Why? Because what will be changing in the total cost is only the variable cost. Because fixed cost will not change. So in that case, you get the 40 million divided by 40 units. So you will be getting 1 unit cost is how much? 1 unit variable cost is how much? The changing cost per 1 unit is 1 million, right? So answer for the question 3 is number A, that is 1 million. That is 1 million. So we'll go for the question 4. Question 4. the internal rate of return for two mutually exclusive projects. What is my two mutually exclusive? Two mutually exclusive means if you select someone, you have to ignore the other. Let's say you have two projects. So you have to select either one of these. Either one of these you have to select. So you cannot select both. So let's say you are getting a Hyundai vehicle versus a Honda. Let's say Toyota vehicle versus a Honda vehicle. So you don't need both, no. You have to decide one. If you have money, okay. But in this case, two mutually exclusive means you have to select one. Projects with conventional cash flows is given in the following table. So IRR given, project X and project Y. Following statements were then made based on the above results. Project Y should have net present value higher than of project X. Net present values of both projects should be favorable. Project Y should have a shorter undiscounted payback period than project X. If the cost of capital of the company is 18%, which of the above statements are always correct? Normally by percentages, can you tell about the number of values? I mean, NPV will be this much. You cannot tell like that. But you can tell whether the project will be accepted or not. So, please make sure through percentages we cannot tell about values. But you know, as per IRR, what is IRR? What is IRR rule? IRR rule is what? IRR rule is what? If the IRR is higher than cost of capital, what is IRR? IRR is the point where the NPV will be 0. So let's say your IRR in this case, project X is 20%. No? So if the cost of capital company is 18% means this is more than the cost of capital. So your cost is 18, but you are actually getting a return of 20. So in that case, what will happen? Project will accept. Project will accept means what? There is a plus NPV. You know that is a plus NPV, but you cannot tell exactly what is the value. You cannot tell 2 million, 3 million, you cannot tell like that. But you can tell that will be plus. So if the cost of capital of the company is 18%, which of the above statements are always correct? Always. First one, project Y should have a net present value higher than that of project X. You cannot tell like that. You can tell both of them will have plus positive NPV, but you cannot tell whichever is higher, because why? This is basically based on the percentages. But your project value is higher. Let's say one project investment is just 1,000, other one is 1 million. So in that case, even that is a less percentage, the value might be higher. The net present values of both projects should be favorable. That is correct, no? Why? Because this rule is there. IRR is higher than cost of capital in both project X and project Y. Then, third one, project Y should have a shorter undiscounted payback period than project X. You cannot tell about even the payback because you need cash flows. How much of cash flows will be happen in the first year, second year, third year, you need to calculate payback. So in that case, the answer will be B. Answer will be B. That is the two only, second one only. Which of the following is true? The question number 5. Which of the following is true when comparing the standard material cost with budgeted material cost? Standard material with the budgeted. So which of the following is true? See the first one. Both are always equal in value. Is this both are equal? Standard and budgeted? If the standard and budgeted is always true, do we need management accounting? No. This is not true. So these are not equal. The second one, budgeted material cost is the actual material utilization at standard material cost. What is that? No, that is what? That is the standard material cost. That is the actual material utilization at the standard rate, standard material cost. That is you calculate as the standard cost, not the budgeted material cost. So what you have to do for these theory questions, when you have question 1, 2, 3, 4, question 1, 2, 3, 4, what you have to do? You have to see, okay, whether this is incorrect, this is incorrect. Likewise, you have to get the answers which is incorrect. Then you will find out, okay, this one incorrect, this one incorrect, this one about, okay, but this is correct. So likewise, the reduce imbalance, ignore imbalance method. You have to ignore in the theory questions. Okay, when you have 4 questions, this is incorrect, this is incorrect. Likewise, you have to remove, and you have to see from the, let's say you have 2 options. You cut off 2. So then the probability of getting the correct answer will be 50%. No? If not, it will be 25%. So here the third one, budgeted material cost is the standard material utilization at standard material cost. Correct? No? Standard utilization. How much of standard and at the standard rate? That is budget. How much you are budgeted to produce? That is standard, no? Standard quantity at standard rate. Budgeted. So that is correct. Anyway, we will see the fourth one also. Standard material cost is greater in value than budgeted material cost. That you cannot tell. Sometimes it can be changed. So the answer for this is C. Answer for this is C. So see the next one. Question 6. Question 6. So we can have here. So see, these first few questions might be easy at the examination. Sometimes it can be difficult, but what I'm telling you using the past mock exams or the pilot paper. So sometimes these first questions can be easy. So in that case, you have to save your time to the next questions. Maybe you don't need to allocate 20 minutes for first 10 questions. So the question 6. Question 6. A direct labor employee's wage in week 5 consists of the following. Basic pay for normal hours work, 36 hours at rupees 400 per hour. Pay at the basic rate for overtime, 6 hours at rupees 400 per hour. Overtime shift premium given, a bonus payment given. Total gross wages in week 5 for 42 hours of work given. The direct labor cost for this employee in week 5. They are asking direct. Please make sure this word is important. Direct. What is direct, Lamai? Direct. The directly paying for the hours. Overtime is a direct payment or not? Overtime is not a direct payment. Why? Overtime is the additional payment you will be getting. Anyway, direct cost of doing the work is just the pay per normal hour rate. But the overtime will be what? That is indirect. Why? That will be paying as an addition. So if you are doing this work in a normal hour, then the normal rate, no. Direct involved in producing the product, manufacturing the product. That is the direct cost. So in this case, direct labor cost for cost are what? Basic pay for normal hours work, that is 14,400. That is 14,400. Then the next one, pay at the basic rate for overtime. Overtime basic rate. So this is, first one will be basic pay. Basic pay. Basic rate. Basic rate for OT, overtime. That is 2,400. 2,400. So both of these you will be getting 16,800. 16,800. So that is the answer. So answer will be answer B. Answer B for this. Right? So that's the sixth question. So we'll go to question number 7. Question number 7. The valuation department of a large firm of surveys wishes to develop a method of predicting its total cost in a period. The following fast costs have been recorded at two activity levels. So then number of valuations given, total cost given. Total cost only given, not the variable cost or fixed cost. So you have to make sure the variable cost and the fixed cost. So the period 1 and the period 2, number of valuations given. So that is the units, number of units and the total cost. Then which of the following would represent the total cost model for a period? Total cost model. So you have to put as an equation. Total cost will be equal this fixed cost, this variable cost. So how to do this? Total cost will be equal to what? That is fixed cost plus variable cost. So what will be changing here? This is fixed, and this is changing. This is a changing variable. This is a fixed variable. Okay. So what you have to do is get the same high and low technique. So what you can do, number of valuations and the total cost. So they have given this is 420, this is 515, then the total cost given 82,200, then 90,275. This is how they have given. So what you have to get the difference? Difference of the total cost will be the changing. That is the variable cost, the cost that will be changing. So that is then divided by the number of units changing. So let's say 100 units change, let's say 10,000 cost change. So which means that 10,000 cost incurred only for that 100 units. So here difference between these two is how much? 90,275 minus 82,200, that is 8,075. 8,075. Then the difference of these two, 515 divided by 420. Sorry, 515 minus 420, that is 95. So what you have to get now? Per unit cost. Per unit cost will be how much? 8,075 divided by 95. 8,075 divided by 95, that is 85. So that is 85. So 85 means what? The change. That is the variable cost per unit. But in this case, you have to find out what? Fixed cost also. So what you can do? Substitute this per 1. At 420, we'll see. At 420 into 85 is how much? 420 into 85, how much? 35,700. Oh, 515, 85 is how much? 43,775. So difference between these two, or either these two will be what? That is the fixed cost. Now see the difference. 82,200 minus 35,700. Answer 35,700. 46,500. The same here. 90,275 minus 43,775. That is also same answer. So the fixed cost is how much? 46,500. 46,500. So how to have the equation? See, fixed cost, variable cost. So fixed cost is fixed, no? Fixed cost is how much? 46,500. 46,500. Then the variable cost is what? Variable cost will be 85. 85, but that will be based on how much you need. You will put V, variations. So whatever the number of variation, if you get this total cost should be similar. You can test this by substituting 420. So you put 420 here, 420 into 85, you can get the answer. Then plus 46,500, you have to get the answer of 82,200. Now, how to do this calculator? How to do this through calculator? See, in calculator, so this is for the 7th question. 7th question. You may get the answer within 10 seconds. How to get that? You have to put in the calculator bracket. You get this 2. You get this difference 90,275. 90,275 minus then 82,200. 82,200, that is bracket close, divided by the next one, again in bracket this change, 550 minus 420. 515 minus 420. So you will be getting what? Through this, you will be getting the variable cost. Then what you can do? You have to find out the fixed cost. So 85,200. 85,200 is this, no? Minus what? 85 into how many variations? So this is 82,200. 82,200 minus 85 into 420 variations. You have to get the answer as how much? You have to get the answer as 46,500. So see through the calculator. So see through the calculator I am doing. So show the calculator. First one you have to get in bracket 90,275. Then minus 82,200 bracket close divided. Again bracket 515 minus 420 bracket close. You will be getting the answer as 85. Again see 90,275 minus 82,200 bracket close divided by 515 minus 420. You are getting the answer. Then the next one 82,200 minus 85 into 420, you will be getting the answer as 46,500. I am not going to do again in the next questions. I am just showing you how easy this. So you are getting the answer, right? So likewise you can get the answer. So in this case, the correct answer is answer A. Answer A for the 7th question. Then go to the 8th one. Go to 8. Management consultancy recovers overheads on chargeable consulting hours. Budgeted overheads were rupees 615 million and actual consulting hours were 32,150. Then overheads were under recovered by 35 million. The budget overheads absorption rate per hour. So they are asking the absorption rate per hour if actual overheads were 694 million. How to do this? What is actually this? I will give you a small example. Let's say this is budgeted. This is budgeted. Okay. So let's say you budgeted for 100 units. 100 units. Right? So per one unit you have budgeted 10 hours will be needed. 10 hours will be needed. So how many hours you need? You need 1,000 hours. This is budgeted. Then actual. Actual, what happened? Both these change. Budgeted, you have, so actually you have actual units. You have produced only 90. Only 90. Budgeted 100, actually only 90, right? Then per 1 unit, actual hours will be how much? Actual hours will be 11 hours. 11 hours. So in that case, total hours will be how much? Let's say this is 1 unit, 10 hours. So this is 90 units, 11 hours. So 90 into 11, 990. 990. Now in this case, what is the actual hour cost should be absorbed? So see, 100 divided by 10, that is, 1000 divided by 10, so that is 100, no? 100, budgeted cost is this one, right? Then, so in this case, under recovered value is how much? Under recovered. Why? Because for 90 units, how much actually should be absorbed? For 100 it is 1000. For 90 then, that is 900, no? So 900 means under recovered is how much? 90. You haven't absorbed 90. You have only absorbed 900. So 90 is under recovered. Now the question is given like this. So what you have to do is you have to get the absorption rate. So how to get that? What you have to do is you have to get the actual overheads. So we will go for the questions, then I will be coming again for this. So here you will have the actual overheads. Actual overheads is how much? In the question, 694 million 075 000. This is the actual overhead. Then under recovered. So if you get the actual, let's say actual is 1000. Under absorbed is 10, which means budgeted should be how much? 1010. So under recovered will be 35 million. 35 million. Under recovered, sorry, you have to minus, right? So under recovered is 35 million. Then budgeted hours. Now budgeted overhead for how many hours? This is not coming for the budgeted units. This is coming for the actual units. How much the budgeted overheads for the actual units? So budgeted overheads for how many hours? 30 to 150. 30 to 150 will be how much? 694,075 minus. So that is 659,075,000. Right? Then you have to get the budgeted absorption rate. You have two ways to get the absorption rate. First one is budgeted overhead divided by the budgeted labor hours. Or you can get, now this is budgeted overheads for budgeted number of units. So this is budgeted overhead for budgeted units. Or you can tell budgeted overheads for actual units divided by actual hours. So this is also one of the absorption rate. So this is what they have done here. Maybe it says in the question budgeted overheads is 615 million. In that case you will be writing that. That is the reason why I am explaining. You don't need to get 615 million here. Why? That 615 million is not for the consulting hours of 32,150. That 615 million is for that 615 million was for the budgeted number of units only, not for the actual numbers. So that's the reason why you have to use like that. So this divided by 30 to 150. How much? 30 to 150. 20,500. 20,500. So you get the answer, that is answer B. So in the calculator, what you can do, in the calculator you have to just put this 694, maybe you don't need zeros, then minus 35,000, you will be getting the answer as 659075. So you put the answer button, then divided again by how much? 32.15. Then you will be getting the answer 20,500. So that is how you have to get through the calculator. Then the next one, question 9. Question 9. If you are a genius, right? If you are pretty sure about your skills, the knowledge and the logics, I am not avoiding you to go for the calculator, because calculator is provided. So calculator is one way for you to save the time. That is a one way for you to save the time. So the question 9. Question 9. A skirt which cost the retailer rupees 750 is sold at a profit of 25% on the selling price. Then asking the profit would be, this is from which lesson? This is from the pricing. I will again refresh your knowledge in pricing. Just go to the two ways of pricing. First one is markup. Markup price. The second one, margin pricing. Markup pricing and the margin pricing. What is my markup? Markup means profit will be calculated. Profit on what? Profit on cost. What is margin? What is margin? Make sure these are shortcuts for you to get the answer. You have to memorize this, then only. That is the basic of this lesson. The full summary of this lesson is this: profit on price. So you are calculating the profit from the price, percentage from the price. Here percentage from the cost. So in this case, we'll say you have a cost, then the profit is there, then the price is there. Here also cost is there, profit is there, price is there. Here you are putting the profit on cost. So if the cost is 100, always assume the cost is 100 and the profit on cost or the markup price, always assume like this. Let's say profit is 25%. So 25 of this is 25. So it will be, price will be 125. That is markup pricing. In margin pricing, always remember, always assume the price will be 100. Price will be 100. Here you assume cost will be 100. Here you assume price will be 100. If the price is 100, if you are calculating the profit on price, the profit will be how much? If this is 100, this is 25. So you are calculating cost plus profit, then price. So which means cost should be how much? This minus this no cost. So cost should be 75. 75 plus 2500. See, in this case, you calculate the profit on cost. Here you calculate the profit on price. Now see what they are telling. What they are telling now? Skirt which cost the retailer rupees 750 is sold at a profit of 25% on the selling price. Cost is how much? Or profit on the selling price, which method? This one or this? This one, margin pricing. Why? Profit on selling price. So the cost is how much? See, cost is 750. Cost is 750. Cost is 750. So what they are asking? Profit asking. If you know this, you can get this or this. How? If 750 is 75, what would be the 25? Divided this by 75 into 25, you will be getting the profit directly. Any number you can do this. Let's say if the daily cost is 1,200,500 rupees, even you can get. Why? Just divided by 75, because this is equal to 75% of portion. 75 into 25 into profit. You will be getting the answer. So in this case, 750 divided by 75, 750 divided by 75 into 25, that is 250. So this is 750, this is 250. So the price is 1000. You can even calculate now. See, 1000, 25%, 250. So answer would be 250. Just see from this. Just see from this. If they says the cost is 750, now for this the answer should be C. Okay, answer should be C. Just go to this. If say says profit on cost, then this is 750. So what you can do is you have to get the profit. How to get the profit? If 750 equal to 100, so you divide this by 100 into how much? Into 25, you will be getting the profit if this is happening in profit on cost markup pricing. The next one, question number 10. Now you can do any pricing question based on this model. Question number 10. So we'll do the question number 10 here. Right? A firm uses job costing and recovers overhead on direct labor. Overhead will be direct labor. These jobs are worked on during a period, the detail of which are as follows. Job 1, 2, 3 given, opening work in progress, material, labor, overheads for the period by exactly as budgeted, rupees 140,000. Overheads, okay. Jobs 1 and 2 were the only incompleted jobs. So the value of closing work in progress would be, they are in the value of work in progress. So you have to put the job 1, job 2, job 3. But job 3 you don't have work in progress, so you don't need to calculate that, no. So here opening work in progress balance is how much? Opening WIP. Job 1 is 8,500. Job 2 is 0. Then material is how much? 17,150. Then here 29,025. The labor given 12,500. Here 23,000. Then the overheads, what you have to do is divide the overheads. So how to divide overheads? Based on labor cost. Overheads on direct labor. Direct labor cost is how much? 12,500. 12,500 plus 23,000 plus the job 3 is how much? 4,500. Total would be 12,500 plus 23,000 plus 4,500, that is 40,000. So based on 40,000 you have to allocate the overhead. So the total overhead will be how much? Total overhead will be 140,000. So how you can divide? This divided by 40,000 into 12,500, you will be getting the answer here, and that also into 23,000, you will be getting the answer here. So 140,000 divided by 40,000, answer is 3.5. into 12,500, that is 43,750. Then again 140,000 divided by 40,000 into 23,000, the answer is 80,500. So you can get the final answer now. That is here 8,500, 1,750, 12,500, 43,750, 81,900. Then 29,025, 2,300, 80,500. That is 132,525. This equals, both of these equals, that is the answer. 214,425. 214,425. The answer is, for the question 10 is answer D. Answer D. Right? So how you can get the answer? Through the calculator for this. Through the calculator. So first of all, you should have to know this total. 12,500 labor, 23,000 labor plus the job 3 is 4,500, so that is 40,000. You should know that. And first of all, you have to calculate that. So you have to calculate that 40,000. Then you have to calculate with these two. 12,500 plus 23,000 total is 35,500. So after that, easy. How to do that? Then get all the numbers which is mentioned in bracket. 8,500. Then 17,150, then 12,500 plus 29,025 plus 23,000, then plus, how to do that? Total cost is 140. For that, total labor cost is 40,000, but for the job 1 and 2, total labor cost is 35,500. Do this in the calculator, you will be getting the same answer. That is within 15 seconds. I am not asking you to go for this. If you are confident only, you can go. Maybe after doing the question, if you have time, you can do like this. Maybe at the next 20 minutes, last 20 minutes you are saving, then you can do through the calculator. Then the question 11. So question 11, read that. The following information is available for contract AF3. Contract price given, cost of work to date given, estimated cost of completion given, amount of profit to be recognized on the contract is. So how you can do is, now get the total cost. This is contract, no contract, how you are recognizing the cost and the profit price based on the percentage of completion. If when you are doing financial reporting subject in the next level also, you will understand this. That is in the financial reporting as well. So good to know in this level. So total cost is how much given? That is cost of work to date is 5,040,000 plus estimated cost of completion is 3,960. So the total is 9 million. Total is 9 million. Okay. Then the percentage of completion is how much? Percentage of completion is how much? Total is 9,000. You are done is 540. Right? Total is 9,000. So into 100% you will be getting See, the total cost of finishing this is 9 million. You have done only 5,40,000. So your percentage will be how much? 56%. You have done up to 56% of the project is done. So what you can do is you can only recognize the revenue and the cost for how much of percentage? Only 56%. So then get the price applicable for 56%. So how to get? Price is how much? The price is 15 million. So 15 million into 0.56, that is 8,400. So now you can get the answer. How to get? 8,400 minus 540, that is the cost. So this is the price for 56%. This is the cost for 56%. Then get the answer. 8,400 minus 540, 3.360. So that is, the answer is B. Answer is B here. So next one, question 12. Question 12. This also you can do in the calculator. Same things, no? So question 12. Shiny PLC has two processors Y and Z. There is an expected loss of 5% of input in process Y and 7% of input in process Z. Activity during a 4-week period is as follows. So material input given, output given. Is there an abnormal gain or abnormal loss for each process? So this is Y, this is Z. This is Y, this is Z. Input is how much for both the processes? So this is from process costing. Process costing is a very important part of your syllabus. Input Y is 20,000. Y is 20,000. Z is how much? 28,000. 28,000. Then normal loss should be how much? From input. Normal loss. What is normal loss? Expected loss. Normally, how much of loss will happen? When you are making a shirt, how much of clothes should be cut off? That you cannot use. So, normal loss. I will put as normal loss without expected loss. Maybe expected loss or same name. From Y, how much? Percentage would be 5%. So, 20,000 into 5%, that is 1,000. So 1,000 will be the normal loss. From Z, that is 7%. So 28,000 into 7%. 1,960. Then when you get the input and the normal loss minus that, what you will be getting? That is expected output. Expected output. So expected output of Z is 19,000, where expected output of, Y is 19,000, Z is how much? 20,960, 1,960, so 26, this. Then, what is abnormal loss or gain? When there is a difference between the expected output with the actual output, that difference we call as abnormal loss or gain. So the actual output is how much? Here Y is 18,500, Z is 26,100. So see, now there is a difference. Now here expected output 19,000, but you actually got 18,500. So you actually got lesser than the expected output. So in this case you will be having what? Abnormal gain or loss. You didn't get what you expected. So there is a more loss, that is abnormal loss. Here expected output is this, but you actually got more than what you expected. So you didn't expect this. That is not normal. That is abnormal. But that loss or gain is what we call abnormal gain. Abnormal gain. So there is abnormal gain in Z and abnormal loss in here. So the correct answer is answer C. Answer C. Then the question 13. Question 13. Carlton Company manufactures a product in a single process operation. Normal loss is 10% of input. Loss occurs at the end of the process. Data for June is as follows. Opening closing inventory. So work in progress nil. No inventory. Cost of input materials 3,300 units. So rupees 5,9,100. Direct labor and production overhead given. Output finished goods given. The full cost of finished output is June. Full cost of finished output in June is asking. First of all, you have to calculate those things. So I will calculate here. Input is how much? Input is 3,300. Yes, 3,300. Normal loss is how much? Normal loss is 10%. So 10% from input, no, that is 330. So our expected output is how much? 3,300 minus 2,970. Right? Okay. Then actual output is how much? Same like what we have done before. Actual output given 2,750. So the difference is what we call as abnormal loss. Abnormal loss is 220. So we need this information to do this. Then are these any difference between the material, labor and the overhead percentage of completion? No. No opening and closing. So you can put everything together. Material, labor and overhead. Material, labor and overhead. Everything given. So then you have to put here the numbers started and finished. How much started in this year and finished? How much? That is this one, no, because no input and output. So 2,750. 2,750. So what would be the normal loss? Are we valuing the normal loss? We are not valuing the normal loss. Then abnormal loss. Abnormal loss, are we valuing? Yes, we value. So abnormal loss is 220. So why I have put this? Maybe you can put here percentage, number of units. So here percentage doesn't matter. So the total equivalent units is how much? Equivalent units in process costing. You might have learned this. 2,750 plus 220. Equivalent units in singular we tell as samanupathika ekaka. Equivalent units how much? 2,970. Then the cost is how much? The cost is how much? Input material cost is 5,900 plus labor and overheads, that is 30,000. So the total is 89,100. 89,100 then divided by the number of equivalent units. So you will be getting, okay, one equivalent unit cost is how much? 8,900 divided by 2,970. That is 30. 30. So 30 into the output 2,750. How much? That is 82,500. So the answer is for question 13 is answer C. Very easy, ne? Right? So you can do this in calculator also, just like how First of all, you have to get these, then just put 2750, 220. So this is, so you get the answer. So 8900 divided by the answer, you will be getting answer into 2750, you will be getting this. This is only for the students who need that. So I don't think calculator is not needed again. So I will be telling all the calculations if I need to do, because the objective from this is to clarify you the answers, how to get the answers, right? So if you are bright student, maybe you can go from the calculator, that is no problem. Everything you are doing here, you don't need to write, no, because you don't need to provide workings to the examiner. So you can, even if you can get from the mind, the answer is okay. But what is more important is do all the questions. Then you can get through the examination. Then question 14. Question 14. Question 14. Chatura PLC uses the FIFO method of process costing. At the end of a 4-week period, the following information was available for process P. Opening WIP given 60% complete, costing rupees 3000 to date. Closing WIP given 1500 units. Transfer to next process 7000 units. How many units is started and completed? Very easy. Why? See, they have given the output transferred. Output transferred is how much? Output transferred is 7000. Then when you have the opening WIP will not be started this year, no? Opening WIP means the inventory which is started in the last year. So opening WIP is how much? That is 2000. So transfer total 7000. So whatever the remaining will be started and finished. Started and finished. So the answer is very easy, 5000. For the question 14, the answer is question A. Answer A. For the question 14, answer is A. Then we can go for the next question, that is question 15. Question 15. Read that. When opening inventory worth 8500 liters and closing inventory 6750 liters, a firm had a profit of rupees 62,100 using marginal costing. Okay. The profit using absorption costing, assuming that the fixed overhead absorption rate was rupees 3 per liter. So you are asking the profit using absorption costing. Profit. What is the absorption costing profit if the absorption rate is 3 per liter? This marginal versus absorption costing is a lesson where most of the students get in the wrong answers due to not having the basic logic of this lesson. What is this? I will explain again. Marginal and absorption. Marginal and absorption. What happens in marginal costing? Fixed cost. Let's say fixed cost is 100,000. So absorption costing also fixed cost 100,000. Just example, not for this question. So what happened in marginal costing? We will deduct this 100,000 in the same year. In the same year, doesn't matter whether the inventory is there, whether the opening inventory is there, closing inventory there, fixed cost, whatever happens in that year will be deducted in that year. But in absorption costing, we are not doing that. What we are doing is, we are allocating a fixed cost to the inventory and we will carry that fixed cost with the inventory. Now let's say as an example, in marginal costing, if the 1000 of inventory is produced and only 500 sold, so 100,000 already charged to the account. Why? They don't care how much of the inventory has been produced. But in absorption, when 1000 unit produced, when 500 sold, what will happen? They will only deduct the cost of fixed cost of 100,000 from 100,000, which is related to 500. So in this case, they deduct, these people deduct 100,000, but those people will deduct only 50,000. What happens? They are closing stock, closing inventory, 500 will be overcosted with the fixed cost than this. So in absorption costing, opening inventory value, closing inventory value is higher than what? The marginal costing. So the difference between the absorption costing inventory and the marginal costing inventory is what? That is the fixed cost absorption. So see, absorption costing inventory minus marginal costing inventory, you will be getting the answer how much? What is the answer? That answer is the fixed cost absorbed. So when the difference is the fixed cost absorption, means in questions, if they are giving you a fixed cost absorption rate, the difference between two inventories into that will be the difference between the cost of the marginal costing and the absorption costing. So difference of the cost means the difference of the profit also. So that is the only impact to the profit. So we'll go for this question. I hope you will have a good understanding of the marginal and the absorption costing again before your examination. Don't be afraid of this exam. All these are theoretical and logical areas. You have to go through the question, read well and do the exam. So the opening inventory was 8,500 liters and the closing inventory is 6,750. So opening inventory, how much? Closing inventory is 8,500, closing is 6,750. So the difference of this is how much? 1,750, no? 1,750. So the closing inventory and the opening difference is how much? 1,750. So if the closing inventory is higher, what will happen? Profit is higher. Always remember this. Why profit is higher? When the closing inventory is higher, cost of sales is lower. When the cost of sales is lower, profit is higher. Then when the closing inventory is lower, profit is lower. Then the difference is 1,750. That is okay. No difference in the inventory, in the marginal costing and the absorption costing. But there is a fixed overhead. Absorption rate is how much? Rupees 3 per liter. So which means 1,750 into 3 means the total difference of the marginal costing and the absorption costing. That is how much? 5,250. Now tell me, closing inventory is higher or opening inventory is higher? Closing inventory is lower, no? Not higher. So in that case, difference is opening inventory is higher. When the opening inventory higher, or in the other way, closing inventory is lower, profit should be lowered. So the absorption costing profit now should be lowered. The reason is there is a high inventory in the opening inventory. So in that case, profit of marginal costing profit minus fixed overhead difference in absorption costing, you will be getting what? The profit in absorption costing. So profit in marginal costing is 6200, that is here 5250, the total is 56850. So this is the answer B. Now see, this is just write this also if you need. If the closing inventory is higher, profit in absorption costing is higher. Then other way around, if the closing inventory is lower means normally in the marginal and absorption costing, if you see closing inventory is lower, profit in absorption costing is lower than the marginal. And also if you can do from the other way around also, opening, let's say closing inventory is 0, they give like this. If the opening inventory is higher, profit in absorption costing is again lower. If opening inventory is lower, then profit in absorption costing is higher compared to marginal costing. You can remember like that also. If you are not a student, you can use from the logic. If you think like this lesson is very difficult, maybe you can have these tricks to get through the examination. So we'll go for the question number 16th. So then the question 16th. Question 16. Last month, the manufacturing company's profit was rupees 2 million, calculated using absorption costing principles. If marginal costing principle had been used, a loss of rupees 3 million would have incurred. So the difference between this is how much? 5 million. Why? Profit 2 million, loss 3 million. If marginal costing principle had been used years, the company's fixed production cost is rupees 2000 per unit. Sales last month were 10,000 units. Last month production in units were. You have to get that. So first of all, get the difference in the profit. So the profit in absorption costing. Profit in absorption costing. How much? 2 million. Then loss in marginal costing, that is 3 million. This is a loss minus. The difference between this is how much? Not 1 million. This is 2 million. 2 million minus 2 million, 0. Again 0 minus 3 million, then only this will be coming. So to go from absorption to marginal, difference is how much? Difference is 5 million. Okay, that's why they have given like this. This is a profit, this is a loss. So the difference is 5 million. Difference is 5 million. So this difference is what? Difference is the fixed cost, as I explained. Fixed cost. So the fixed cost is 5 million. Fixed cost is 5 million. Then, if you get the fixed cost divided by the fixed cost per unit, what will you get? Not the number of units. That is the number of units, the difference, no? The difference of cost will be calculated by when there is a closing inventory. Right? So that is because of that. So, fixed cost divided by fixed cost per unit what will be getting? What will you are getting? What will you be getting? Number of units remained in the stock. In the stock. That is how you have to get. Okay. So then fixed cost is 5 million. 5 million. Fixed cost per unit is 2000. Number of units remain how much? 5 million divided by 2 million. That is 2500 of inventories remained. What they are asking? Last month production. Production will be what? Production will be sales plus closing stock will be equal to the production. So sales how much? Sales they have given 10,000. Last month sales 10,000. Closing stock 2,500 means your production should be this. You can tell as the opening closing stock difference also. That is also same answer. So 12,500. Answer is 12,500. That is answer D. Answer D for question 16. Question 16. Then go for the question 17. Question 17. Question 17, read. A company uses standard marginal costing. Last month when all sales were at the standard selling price, the standard contribution from actual sales was rupees 50,000 and the following variances arose. The variable cost variance rupees 3,500 adverse, total fixed cost variance rupees 1,000 favorable, sales volume contribution variance rupees 2,000 favorable. Asking actual contribution, right? We'll write first of all the standard contribution. Standard contribution from actual sales. From actual sales. How much? 50,000. So to get the actual contribution, because actual sales given, do you need to go for the sales volume variance? No. Why? From sales volume variance, what you are calculating? The contribution that is changed because of the volume, because of the number of quantity you sold and budgeted to sold. But you don't need that. And total fixed cost variance do you need? No. Why? Fixed cost is not affecting for the contribution. Fixed cost is affecting for the profit. If they are asking profit, then you have to get the total fixed cost variance. No need to go from those two variants. Only you have to use the next variance. What is that? Total variable cost variance. So this is the standard contribution that you were predicted. But actually there is a difference of the variable cost. That is an adverse difference. So if there is an adverse difference, what will happen? This will be minus. So see, total variable cost variance is how much? That is 3,500 adverse. So means you have to deduct this from. Then you are getting what? Actual contribution from actual sales. So the answer should be this minus this 46,500. So answer A. That is question 17. Then we'll go for the question 18. Question 18. Read that. XYZ uses standard costing. The following data relates to labor grade 2. Actual hours given, standard allowance for actual production given, Then standard rate per hour given, rate variance given, actual rate of pay per hour is asking. First of all, in these kind of questions, write whatever the information included in the question. So they have given rate variance, no? We'll write the rate variance. We'll write the rate variance. Rate variance, how to have the formula? Rate variance equal to standard rate minus actual rate into what? Hours paid. Hours paid. So you write whatever you have. Rate variance given, that is adverse. Adverse means plus or minus, minus. Minus how much? Rate variance is 41,600. Standard rate given 500. Minus what they are asking? They are asking the actual rate. That is not given. We put as X. So into hours paid. How many hours? Actual hours worked 10,400. 10,400. Now this is the formula. Go with the formula. This is minus 41,600. 10,400 into 500 minus 10,400 into X. So 10,400 into 500, how much? 5.2 million. Minus 10,400 X. So you put X here, 10,400 X equal 5.2 million. This coming to this, that is plus 41,600. Then this plus 41,600 should be 4,241,600. 10,400 X. This divided by 10,400. This also divided by 10,400. So this will be cut off. X equal what? This divided by 10,400, that is 504. The answer is C. Very easy, ne? You have to write whatever you know. So you wrote this, you know this, you know this, you knew this, but you didn't know this. So after that you find out that. Now let's say you cannot do like this. What you can do? Lama, you have 4 answers. Just substitute this. You cannot get this. Let's say you have written only this. You have written only this. What you can do? See the first answer 495. You put like this. 500 minus 495 into 10,400. You see whether this answer is getting 495 into 500, 10,400. The answer is 52,000. No, that is not the correct answer. You will put the second one. Second answer is 496. So difference is 4. 4 into 10,400. 41,000. So this is minus. This is plus. Sorry, this is plus. Into 10,400, you will be getting a plus 41,600. That is not the answer then. Then you have to get the third one. That is 504. You put 504. 5 minus 504. Difference is 4. 4 into 10,400. Answer is 41,600. This is the beauty of MCQ questions. Sometimes you don't know the logic. You don't know how to go. But you can substitute the answers and get the correct answer. That is the last way. That is the last way you can do. If you don't know the method, only you can follow this. But I know personally, some students are following this. That is a good method. If you don't know that, maybe you can do like this and see whether the answer is correct. Right? Then the question 19. The budget committee is not responsible for preparing functional budget. Functional budget, budget committee is preparing? No. That is the answer. Anyway, we'll see this is not okay. Not the responsible, not responsible for. Second one. So question number 90. Yes. So 4 answers you have now. So you have to cut off the incorrect answers. The second one, timetable in the budgeting operation. Yes, you can go for the budgeting theory and see this. Yes, happening. You have to look at overall. Allocating responsibility for the budget preparer. Yes, budget committee is the one who is allocating. Yes. Fourth one, monitoring the budgeting process. Yes. So this is the incorrect. So likewise, you have to put all others. See, all others are correct. Okay. Then the 20th question. 20th question. The following information is available for BCO. The number of units of production for the year is asking. Budgeted annual sales given, opening inventory, closing inventory. The number of unit productions. This is like creating a production budget. When creating a production budget, you know, first of all, you have to get the sales. Then how to decide that how much of numbers you will be manufacturing? Do you need to manufacture the closing inventory also? Yes. You cannot just manufacture sales only. Now sales will be how much? 100,000 units. You cannot just manufacture only the sales. You have to manufacture what? Closing inventory also you have to manufacture. Why? You are going to have this much of closing inventory in your hand in this month. So that should be manufactured in this month. So closing inventory also you have to manufacture. Closing inventory, how much? Closing inventory will be 27,500. So altogether you have to manufacture 127,500. But wait. You don't do it to manufacture this much if you have already manufactured. So is there a balance that you have already manufactured previously? Yes. How much? That is opening inventory is 25,000. So 25,000 you have already manufactured. You don't need to manufacture that. Then you have to minus that opening inventory. Opening inventory 25,000. So then you are getting the answer as 100 to 500. So the correct answer is D. Correct answer is D. Then 21. We'll go to 21 here. The following information is available for ABC company. For May and June they have given. Then how much money should be budgeted for supplier payments in June? Budgeted sales given, gross profit as a percentage of sales given, closing trade payables given, opening inventory, closing inventory nil. You have to see how much you are paying for the suppliers in June. So month of June. For month of June. So sales given. Sales how much? June 40,000. In relation to the suppliers, what you have? The purchasers. Purchasers will have in the cost of sales. Cost of sales will have opening inventory and closing inventory, but it says that is nil. So which means the total purchasers means the total cost of sales. Now how can you find out the cost of sales from the 40,000? Cost of sales you have to calculate using the gross profit margin. Gross profit margin is how much? 30%. If the gross profit is 30%, the other 70% should be what? Cost of sales. that 70%, that 70% will be the cost of sales. So 40,000 into 70%, 28,000 of cost of sales, so you can tell as purchases. Purchases in June, 28,000. Then from this, how much we will be paying in the June? From this also 50%. This also 50% will be paid in June. That is 40,000. So supplier payment for June 14,000. Is that the correct answer? No. This is 14 million. Okay. This is given in hundreds now. There is a payment that you had to pay from month of May also. So how to find out that? Supplier payment for May, month of May you have to calculate. How to calculate that? That also you have to calculate. Okay, budgeted sales given 30,000. From 30,000, 50%. So sales given 30,000. Then the cost of sales from this 30%. So which means 70%. So that is 21,000. From this 50% paid last time, and so from this trade payables, how much? This from this 50%, 10,500. So this 10,500 also should be put here. So 10,500. So both of these, this and this should be paid this month. So this plus 10,500, that is 24,500. So 24,500,000. That is the answer. See, not only the June payment you have to do in June, you have to do 50% of the May payment also in June. Right? So in that case, the total of this is this. So the correct answer is answer C. Answer C. Right? Then the question 22nd. 22. Question 22. The following scores are observed for the time taken to complete a task in minutes. It's given. What is the median score? What is median? Median is whatever in the middle. To write this kind of answer for this kind of a question, what you have to do? You have to first of all write all these in a ascending or a descending order. Either one is okay. So first of all, we'll write all these. First you get 8. So you have to put a tick. Then 9. Then 11. Then 12. Then 14, 15, 17, 21, 24, 34. So how many numbers? 1, 2, 3, 4, 5, 6, 7, 8, 9, 10. 10. When the 10 is there, how to find the middle one? If the 11 is there, 6th one is the middle. So you cut off this. This 4 you cut off. This 4 you cut off. Then this 4 you cut off. So you will have 2. From this also you have to find out the middle. How to do that? 14 plus 15 divided by 2. The answer is 14.5. So for the question 22nd, the answer is C. Median means what is in the middle. Mode means whatever the number repeated again and again. Right? So this is the question number 22nd. We'll go to question number 23.